From the floor of the CME Group, this is Danny Riley on today's Cash Close. They ain't closing my pit. The name of this video, S&P 500's largest weekly rally since January 2013. The high of the day in the S&P came at a 206.75 mid-morning. The low came at a 2:045 even late. At last, we're 2:046 even. We're down 9.1 handles. Total volume, 1.6 million minis trade and 2,000 big S&Ps trade in the pit. Very low volume day for an unemployment figure. The MIM, or MOC, the MIM was right on this time. The MIM was showing sell 365 million, and the actual MOC came out sell 380 million. Next week's economic calendar starts out with 13 economic reports, 9 T-bill or T-bond auctions or announcements, 1 Federal Reserve Bank president speaking, and a slew of earnings. Monday's trade starts out with no economic reports and a measly 3 and 6 month T-bill auction. You know, maybe one of these days those T-bill auctions will become important again, maybe as they raise rates. Now, as I said in the opening print today, we were looking for a higher than expected non-farm payroll. We got that. And then I finished off the opening print by saying that, you know, you could see some type of counter trend Friday trade. And despite the early rally and push up, which made the market look so firm, the S&P eventually gave way and has been down 5 out of the last 6 Fridays. That's not a good stat. Fridays have not been very kind to the S&P. Now, I just kind of lost my train of thought. We started out the year in some kind of correction mode, and then the S&P bounced back off, and then it sold back off, and then it rallied back again. And you know what? I've been trying to tell you guys ever since the year began, 1, to expect an increase in volatility, and 2, to expect exactly what we're seeing right now. The S&P is acting like a yo-yo. It goes up, it takes out the buy stops, it goes down, it takes out the sell stops, and in between, everybody just gets shaken out. And that's really what's going on here. You know what? Other than that, you know, the only thing I can say is that the S&P made it up toward pretty much higher than what most people expected. I think most people expected, you know, the S&P could reach 2050, 2060, but it exceeded that. And then today obviously gave way to the downside. We're going to keep it like that, traders. You know, I don't really know how to forecast the S&P. I guess if I had a gun to my head, I'd say that we're closer to contract highs and that eventually they will run those stops. I'm going to leave it like that. I want to wish everybody a very good weekend, and we will see you on the opening print on Monday.